Investing into stocks for long-term investing is a great asset. It is also good for setting up a retirement plan. But which stocks are recommended to invest in? Welcome to the TheBizPage channel. In this video, we will be looking at some of the best long-term stocks to invest in. If you haven't already, then be sure to subscribe to my channel for more content. Now without further ado, let's dive in. The first stock in this video is the company of Apple. As we know, Apple is one of the most successful electronic and tech businesses in the world. Ever since the company entered the stock market in December of 1980, it has been steadily on the rise and growing in value. It was the year of 2018 where Apple reached a market milestone. On August 2, 2018, Apple became the first company worldwide to reach a market value of $1 trillion. As of December 31, 2019, Apple has also owned the largest holding in the Berkshire Hathaway portfolio. This holding came at a value of almost $72 billion. Apple has held a 49% share of the US smartphone market in the fourth quarter of 2019. That has also led into the tablet industry, with a market share of 36.5%. On February 13, 2020, Apple continued its payment of a 77-cent quarterly dividend. The second stock to be looked at is the Johnson & Johnson Company. The Johnson & Johnson Company, or J&J, is a New Jersey-based healthcare and pharmaceutical giant and is known in financial parlance as a dividend aristocrat. This means that this stock pays a good dividend price per share. Since the year of 1973, Johnson & Johnson has increased the value of its annual cash dividends every single year. Ever since October of 1980, the stock has been on a steady upward trend. In the year of 2019, the company was able to pay dividends of up to $3.75 a share. A year later in March of 2020, the company was able to pay a quarterly dividend of 95 cents a share. Within a long-term period, dividends reinvested in J&J stock will enable you to accumulate a larger number of shares, which can be worth a substantial amount if those shares appreciate. This also means that you will make more money through good dividends. Starting in 2010, within the 10 years ending on April 2 of 2020, the stock's split adjusted return, not including reinvested cash dividends, was 96.36%. The third stock to be looked at is the company of Microsoft. As we know, Microsoft was founded by successful businessman and philanthropist Bill Gates. In April of 2019, the Microsoft company became the third company to achieve a market value of more than $1 trillion. This achievement has put Bill Gates among the world's wealthiest people. In recent times, Microsoft has been becoming less reliant on its Office software suite and Windows operating system for revenue. In the second quarter of the economic year 2020, the company's revenue from server products and cloud services rose 30%. Revenue from its Azure cloud services alone grew 62%. Microsoft entered the stock market within the year of 1986. The stock since has raised and is considered reliant for long-term investors and retirement plans. Microsoft has also paid a quarterly dividend since the fourth quarter of economic year 2004. Within economic year 2020, it was paying a quarterly dividend of 51 cents per share. Before we move on, are you enjoying this video? If you are, then do leave a like and check out my channel for more valuable content. The fourth stock to be looked at is the McDonald's franchise and fast food company. Founded in 1955, the McDonald's company is the second largest fast food chain in the world. McDonald's is also currently the biggest fast food chain in the US in terms of sales, with annual revenue almost twice that of its closest competitor, Starbucks. It also had the most valuable food brand in the world in the year of 2019, with the value being at $130.4 billion. Since McDonald's went public and started trading in the stock market in 1965, the stock price has averaged a positive trend and has been good for investing long and short term. McDonald's has increased its total annual dividend payments every year since 1977. In 2019, its annual dividend amounted to $4.73, up from $4.19 in 2018.17 starting in 2010. Within the 10 years that ended on April 2, 2020, the stock's total return, excluding reinvested dividends, was 132.5%. Including reinvested dividends, it was 190.54%. The fifth stock to be looked at is the company of Amazon. At present, Amazon is one of the world's largest retailers in terms of revenue. Amazon's current main competitor is Walmart. In the year of 2019, net sales were adding up to $280.5 billion per annum. Amazon's other rival is Microsoft, and like this company, Amazon is starting to rely more on its cloud computing business, called Amazon Web Services, to drive revenue and profit gains. Amazon was put on the stock market since the year of 1997. Ever since then, the stock price has increasingly gone up and many long-term investors have made good money, since the Amazon company is generating good revenue. The stock's average annual return from 2015 to 2019 was 47.23%. It was also Amazon who was the second company to reach a $1 trillion market capitalization, on September 4, 2018, coming after Apple. The sixth and last stock to be looked at is Berkshire Hathaway. This is the company that billionaire investor Warren Buffett famously owns. The company had a stock price of $271,475 in April of 2020. Berkshire Hathaway's Class A stock price was so expensive that most people would have to work several years to buy just one share. The Class B stock price is at a much lower price, being at $179.73 per share in April 2020. Buying a Berkshire stock is almost like betting on Buffett, who built on his investments in textile mills in the 1960s. This enabled him to become the world's third richest person in the 2019 Forbes ranking. Buying this stock also means buying a piece of a large part of companies both well-known and obscure. These companies include insurance company Geico, fast food chain International Dairy Queen, battery maker Duracell, packaged food giant Kraft Heinz, paint maker Benjamin Moore, and the Acme Brick Company. It has been 55 years since the year of 1965, so some people are wondering how the time has gone so fast. However, if you had invested $1,000 with Buffett that year, it would have been worth $27 million in early 2020. If you have the money, this is still a good stock to invest long-term, as the stock price has also been rising steadily since joining the market. So those are the recommended long-term stocks to invest in. Please note that the prices on these stocks are constantly changing. If you are looking to invest, it is recommended that you also do your own research into what is best for you. I would like to thank you for watching this video. I hope some good insights were given. Let me know in the comments section if you have invested in any of the companies stated in this video. If you have found this video informative, then be sure to leave a like and subscribe to my channel for more content coming.